everyone. Welcome back to Ajayastromoneyguru, your go-to channel for the latest updates and advanced analysis on various commodities. I'm Nina, and today, on the 8th of December 2023, we have some exciting developments to discuss in the world of gold and crude oil. So, let's dive right in. Our first focus is on the dazzling world of gold. Just ahead of the eagerly anticipated US non-farm payrolls data, gold prices experienced a notable surge. Spot gold rose by 0.2% to reach $2,028.49 per ounce, while US gold futures dipped slightly by 0.1% to $2,045.30. The dollar's easing contributed to this upward movement, as investors eagerly awaited the US non-farm payrolls data, a critical piece of information that could provide insights into the Federal Reserve's policy trajectory. Despite reaching an all-time peak of $2,135.40 earlier in the week on expectations of a Fed cut, gold experienced a slight setback due to uncertainties surrounding the timing of these reductions. Traders are currently pricing in a 60% chance of a rate cut by March next year, according to CME's FedWatch tool. As we approach the Fed's policy meeting on December 12 to 13, all eyes are on the US non-farm payrolls data, which will likely set the tone for the coming weeks. It's a delicate balance between a potentially softer landing in the US, historically making gold less attractive, and geopolitical tensions that could support gold in 2024, as suggested by the World Gold Council. Now, shifting gears to other precious metals, spot silver fell 0.3% to $23.80 per ounce, platinum rose 2.2% to $909.31, and palladium climbed 3.3% to $974.75 per ounce. Moving on to the dynamic world of crude oil, there's a story of gains and losses. Crude oil prices managed to climb in early trade on Friday, but the week is set to close with a 6% drop, lingering near 6-month lows. Brent crude futures rose by 68 cents, or 0.9%, reaching $74.73 a barrel, while US West Texas Intermediate crude futures gained 64 cents, also up 0.9%, hitting $69.98 a barrel. Unfortunately, both benchmarks are on track for a 5.8% and 6% weekly drop, respectively. Concerns about weakened energy demand in Asia, coupled with high US crude production, have been weighing heavily on the market. China's economic concerns are evident in the data, showing a 9% year-on-year fall in crude oil imports for November. Meanwhile, in India, fuel consumption took a hit in November after a 4-month peak, reflecting reduced travel in the world's third-largest oil consumer. Despite OPEC Plus agreeing to a significant 2.2 million barrels per day in voluntary output cuts for the first quarter of next year, Brent and WTI crude futures are struggling, with both still in contango, suggesting an oversupply scenario. The call for unity came from the two giants, Saudi Arabia and Russia, urging all OPEC Plus members to join the agreement for the greater good of the global economy. However, with US output remaining near record highs of over 13 million barrels per day, as reported by the US Energy Information Administration, the challenges persist. And that's a wrap for today's comprehensive analysis. If you found this information valuable, don't forget to hit the like button, subscribe for more updates, and share your thoughts in the comments below. Until next time, this is Nina from Ajayastromoneyguru, signing off. Happy investing!